This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Black and blue. IBM's revenue has declined for 20 straight quarters, pressuring the stock after hours and potentially impacting trading tomorrow. Deal breaker? Why the insurance industry could find itself at the center of the next budget battle in Washington. Odds of an audit. What are the chances Uncle Sam will come after you? Those stories and more tonight on Nightly Business Report for Tuesday, April 18th. Good evening, everyone. I'm Sue Herrera. Tyler Matheson is off tonight. Lousy earnings reports drove stocks lower today. We'll have more on that in just a moment. But we begin with quarterly results from Dow Component Ibm, which could weigh on stocks tomorrow. Big Blue reported yet another decline in revenue, hurt by weak demand in its technology services business. So let's get to the numbers for you. IBM earned $2.38 a share, 3 cents better than estimates, thanks to gains in its cloud services business. Revenue missed estimates and was down nearly 3% from a year ago. Investors were not happy, sending shares down initially in after-hours trading. Deirdre Bosa takes a closer look at IBM's quarterly results.
This was IBM's 20th straight quarter of declining revenue. The company has been growing its so-called strategic imperatives unit, which includes cloud computing, as well as Watson, its big bet on artificial intelligence. This unit now makes up 42% of its overall revenue. However, it has not been enough to make up for IBM's declining legacy software and services business. Bottom line, this past quarter's results indicate that the company's transformation is going to take more time. For Nightly Business Report, I'm Deirdre Bosa, San Francisco.
IBM wasn't the only Dow component to report. Goldman Sachs surprised investors with a rare earnings miss. Johnson & Johnson also disappointed, while United Healthcare reported an upbeat quarter. But the results pressured the broader market. The Dow Jones Industrial Average fell 113 points to 20,523. The Nasdaq lost 7, and the S&P 500 was off 6. And of those 3 Dow earnings, the rise in United Healthcare was not enough to offset the losses in Johnson & Johnson and Goldman Sachs.
Goldman's big stumbling block, trading revenues, down almost 2.5% from a year earlier. The main culprits, equities down 6% and fixed income flat. Trading was a bright spot, however, for other big banks. JP Morgan Chase and Citibank both posted double-digit increases last week, and Bank of America, reporting today, did even better. Still, at least one analyst believes it's time to pick individual stocks rather than investing in the entire financial sector, which did get a boost following November's election.
We're pretty neutral across this space. We thought that expectations about policy, whether it was rate policy or fiscal stimulus or regulatory policy, had just gotten too constructive, and we've been much more focused on single names where we think there's some earnings opportunity for positive revision, rather than the space as a whole, which we think may be sideways until there's evidence of stronger macro conditions.
Johnson & Johnson also disappointed, despite improvements from its year-earlier numbers. U.S. sales of its blood thinner, Xarelto, and the diabetes drug, Invokana, were lower than expected. Globally, sales of its consumer health products slowed. Still, J&J is raising its guidance, hoping to restock its drug pipeline with its biggest acquisition ever, a $30 billion deal for European biotech Actelion, expected to close in Q2. United Health Group put up better than expected revenue and profit numbers, citing its pullback from the Affordable Care Act exchanges and its growing Medicare business. Revenues rose almost 10%, or nearly $49 billion. The nation's largest healthcare insurer continues to call for a repeal of the ACA health insurer tax, already on hold for 2017, and greater freedom for insurers to tie premiums to the likely health costs of its customers, a touchy subject because older, less healthy customers don't feel they should be charged higher rates.
The health insurers were at the White House today meeting with the Trump administration officials to discuss a key concern for the industry. The issue is whether the president will pull funding from companies that sell plans on the Affordable Care Act exchanges. And as Kayla Tausche reports from Washington, the problem could end up at the center of a potential government standoff.
As the government barrels toward an April 28th funding deadline, one hot-button issue is emerging as a potential deal breaker. So-called cost-sharing reductions, $7 billion paid by the federal government to help shoulder the cost of ensuring lower-income Americans enrolled on the healthcare exchanges. Without a new deal on healthcare reform, the Trump administration may choose to stop making those payments after a May 22nd deadline set by a judge. Democrats want those subsidies included in next week's spending bill, otherwise risking a government shutdown. Here's Senator Chuck Schumer today.
We're working hard to get it in the bill, and we're very hopeful. Negotiations seem to be going quite well, and I'm very hopeful we can come to an agreement that everyone can be proud of.
That would take leverage away from the White House on wholesale health care reform. Last week, President Trump told the Wall Street Journal, quote, "Obamacare is dead next month if it doesn't get that money. What I think should happen and will happen is the Democrats will start calling me and negotiating." Today, insurers met with White House officials in search of some certainty, with days in some states and weeks in others before having to decide whether to participate in exchanges or how much to charge enrollees. Withholding payments to insurers could make participation expensive or force more insurers to withdraw completely. Some answers could come next week when lawmakers return from recess. For Nightly Business Report, I'm Kayla Tausche, Washington.
The Trump administration's economic agenda is also being tested in Georgia. A closely watched special election is taking place just north of Atlanta. The seat in question was vacated by Tom Price when he was appointed Health and Human Services Secretary. And the polls late today show a pretty close race. John Harwood comes to us tonight from Atlanta. Good to see you, John, as always. So how close is this race?
Well, when you combine, Sue, the closeness of the race with Jon Ossoff being at 45% in pre-election polls, he needs 50 to win today, and the unpredictability of special elections, which are such irregular events, you never know what the turnout's going to be or how the turnout is going to skew. Everyone is watching and nervous, and that's why President Trump has been tweeting multiple times today, trying to get Republicans out to prevent this blow to his political momentum.
Well, if the Democratic candidate does win, what does that mean for his agenda, like tax reform and the other pillars, really, of what he's set forward?
What it means, Sue, is that Republicans in Congress are going to be very nervous. They're increasingly, if Jon Ossoff is able to win, especially today, to get 50% in this very crowded field, they're going to be worried that they could lose control of the House next November in 2018. They hadn't really been worried about that before. If that is the case, that means for President Trump getting cooperation on legislative issues like tax reform, on health care, on the budget is going to be increasingly difficult, and that fractured Republican Party is going to get a little bit more fractured.
Yeah, the polls, have been a little bit unreliable as of late, as you well know. But Mr.
That's right.
Yes, Mr. Ossoff's message was to get out and cast your vote. Basically almost an anti-Trump vote. Do we have any sense as to whether that is resonating or not resonating with the population there?
Well, it's certainly gotten him up within striking distance of that 50%. At this high school where people have been voting today, turnout in person is already as high as it was in last November's general election. So that indicates there's a significant amount of interest. And, what Jon Ossoff is saying is even though this district has been in Republican hands for 40 years, even though Tom Price won it by more than 20 points in 2016, that because there are so many college-educated voters, which is the most skeptical white constituency of Trump, he's trying to rally them, and he's got a shot to do it.
All right, John, we will see. Thank you so much for joining us. John Harwood in Atlanta tonight.
You bet.
And now to the economy and the latest report on housing. Builders broke ground on fewer homes in March. According to the Commerce Department, housing starts fell nearly 7% last month. That decline came after strong gains during a warm February. Despite the pullback, the pace of construction so far this year is stronger than in 2016. The list of Fed officials calling for the central bank to trim its bond holdings is getting longer. Today, Esther George, the head of the Kansas City Fed, warned against waiting too long to do so. She has also urged the Fed to hike interest rates in the past. The minutes from the last meeting show that most policymakers do expect to begin shedding Treasury mortgage-backed bonds this year, and that's a process that many say will raise yields. The Fed purchased the bonds in an effort to shore up the economy during the financial crisis. In Europe, in London specifically, UK Prime Minister Theresa May is calling for early national elections, nearly 3 years before required. She is seeking a stronger mandate for Brexit, the process by which the United Kingdom will exit the European Union.
Despite predictions of immediate financial and economic danger, since the referendum, we have seen consumer confidence remain high, record numbers of jobs, and economic growth that has exceeded all expectations. We have also delivered on the mandate that we were handed by the referendum result. Britain is leaving the European Union, and there can be no turning back.
The upcoming Brexit negotiations will center on two issues: continued access to European Union markets and immigration. The International Monetary Fund raised its growth forecast for Britain's economy and for global growth overall. The organization cited better prospects for the emerging markets and a post-election rise in confidence here in the U.S., but it also warned about the rise of protectionism.
The report we did on trade in our October World Economic Outlook did estimate that this was negatively affecting the growth of world trade. So a further escalation of trade measures with retaliation by some countries could take a chunk out of world trade and therefore out of world growth.
The IMF left its forecast for U.S. growth unchanged and said much depends on the policies coming out of Washington. Still ahead, Facebook's CEO takes the stage at a company conference and talks about the Cleveland murder. Dow Component Verizon is spending at least $1 billion to improve its wireless infrastructure. The largest U.S. wireless carrier, will buy more than 12 million miles of optical fiber from Corning. Verizon sees fiber as critical for a faster next-generation broadband network.
We viewed fiber as the cornerstone building block for the network, the next-generation network. And that network is going to look very different than what we've built in the past. If you look at 2G and third generation and fourth generation of wireless, it was about capacity and throughput. Fifth generation is about those things. We're going to see 100 times faster throughput, but we're going to see things like latency of a network, that the network will go out and come back and respond in less than the time it takes to blink your eye.
Both Verizon and rival AT&T have been buying assets in preparation for a next-generation network as competition in the industry increases. Cardinal Health adds to its portfolio. That's where we begin tonight's Market Focus. The drug distributor is buying device maker Medtronic's patient care, deep vein thrombosis, and nutritional insufficiency units for more than $6 billion. In addition, Cardinal said falling generic drug prices would cause adjusted earnings for the year to come in at the low end of its guidance. Shares of Cardinal Health plunged 11% to $72.39, while Medtronic shares were off just a fraction to $80.33. Vitamin and supplements company GNC beat both earnings and sales expectations in its latest quarter, saying it's seeing stronger transaction growth. The company also added its optimistic new customer loyalty programs will increase customer spending. GNC shares soared nearly 25% to $9.03. Profits and sales fell at Harley-Davidson as the motorcycle maker saw weaker demand for its bikes. That softness is expected to continue through 2017. The company said shipments for the year will be flat to down slightly. Shares fell 4% to $56.91. And Charles Schwab said a rise in new account openings largely helped its results. The bank reported increases in both profit and revenue, noting it also saw strength in its retail business and advisor services division. But shares fell nonetheless. They ended the day down marginally to $37.91. Facebook hosted one of its biggest annual events. The company's developers conference gives CEO Mark Zuckerberg the chance to share his vision for the social media firm and to talk about the development of new technologies. But today, he also used the opportunity to address the Cleveland murder and Facebook's ability to handle offensive and violent videos. Julia Borston reports from San Jose.
More than 4,000 developers flocked to San Jose to hear about Facebook's latest inventions and new tools they'll be able to access. But CEO Mark Zuckerberg kicked off his keynote by addressing uproar surrounding a video shared on Facebook Sunday of a murder and demand for stricter controls.
We have a lot more to do here, and we're reminded of this this week by the tragedy in Cleveland. And our hearts go out to the family and friends of Robert Godwin Sr. And we have a lot of work, and we will keep doing all we can to prevent tragedies like this from happening.
But Zuckerberg tried to focus the conversation on Facebook's technological innovations, particularly when it comes to augmented reality and the growing power of artificial intelligence.
We're making the camera the first augmented reality platform.
While Zuckerberg talked about the company's focus on bringing people together through augmented reality, extending the physical world online, many of these features won't go mainstream for years. But now, Facebook Messenger is already implementing the latest artificial intelligence to give consumers so many different tools and experiences within that Messenger app that they never swipe away. Announcing that bots on Facebook will be open to group conversations to enable gaming and sharing of music. AI-driven virtual assistant M will start making recommendations of everything from restaurant reservations to payment reminders.
There's going to be a lot more things you can do in a social way, like booking a restaurant table, order food, buy movie tickets, and find out when the movie, if it is actually going to play in the showtimes, and many, many more that are launching starting today.
It all fits into Zuckerberg's 10-year plan to connect the world, bringing people together, whether it's in a virtual Facebook space with Oculus headsets or in a group chat on Messenger. For Nightly Business Report, I'm Julia Borston in San Jose, California.
Coming up, why sometimes you're better off not being wealthy. We'll explain. Here's a look at what to watch tomorrow. Dow Component American Express reports earnings after the closing bell. The Federal Reserve releases the Beige Book. That's an anecdotal look at the economy across the country. And the Shanghai Auto Show is underway as China remains the growth engine of the auto industry. And that's what to watch for on Wednesday. It is tax day, and there's a well-known phenomenon that takes place in the markets right around this time of year. As we've reported, stocks tend to dip right before taxes come due. But is the end of tax season typically a boost for the bulls? Dominic Chu takes a look.
The two certainties in life, death and taxes. And for investors, tax season doesn't necessarily have to feel like death, at least if history ends up repeating itself. The month of April has long been regarded as one of the strongest months of the year for stock returns. According to data from LPL Research, over the past 20 years, the S&P 500 has averaged a gain of 2% during the month. But the gains are typically stacked during the second half of the month, which just happens to be in the time typically following each year's tax filing deadline. Market bulls have a lot going for them.
If you isolate all the international geopolitical risks and look at the United States, I would say, absent those risks, it is a positive situation, and there would be some positive seasonality just given the fact that it's spring, that the U.S. consumer has recovered, and earnings do seem to be on a growth trajectory.
During tax season, there is historical data that suggests certain stocks tend to outperform. Since 1980, some of the biggest winners have been Hasbro, Florida Electric Utility, NextEra Energy, and industrial tools company Snap-on in the 20 trading days following the tax deadline. But just because something has trended one way historically doesn't necessarily mean it will repeat itself. There are lots of reasons to be cautious in the weeks ahead.
The largest risks to the stock market rally are the investor need to know everything and have everything right now. Investors have become so short-sighted in our view. They want the new policies from Washington. They want earnings. They want this. They want that. It's going to take time.
Investors will spend the coming weeks processing loads of information and trying to come to an investment conclusion. While seasonal trends in the stock market may be part of the discussion, they shouldn't be the only consideration. For Nightly Business Report, I'm Dominic Chu.
So now that you've hopefully paid your tax bill, do you ever wonder where that money goes? Well, the former CEO of Microsoft had that same question. So a few years ago, Steve Ballmer decided to do something about it. He's been working on a database that makes government financial information accessible in the same way that companies do.
Where the heck is the 10K? No such document really exists, at least not the way I'd want to see it, which is where's the money go? Where's the money come from? Where does the money go? And what kind of outcomes does government get? So about almost 3 years ago, we started on this endeavor.
And his database is called USA Facts. His goal is to create a foundation for a more fact-based discussion on government priorities. And since World War II, tax revenue has come from 4 main sources. According to the Office of Management and Budget, those sources are corporate taxes, excise taxes, individual taxes, and Social Security and Medicare taxes. As you can see here, in 1945, personal income tax provided about 40% of government revenue. In 2015, that number has increased to just under half of total revenue as share from companies shrinks. But how are they spending all that money? According to Pew Research, the federal government spent more than $3 trillion last year, with the bulk of that going to social programs like Social Security and Medicare, as well as national defense. Tim Spies, co-chairman of the tax practice at Eisner-Amper, joins us now to talk about that. Good to see you. Welcome back, Tim.
Thank you very much. Good to be here.
I was kind of surprised that such a large amount of the distribution went to what are essentially social programs.
Yeah, you're absolutely correct. What's driving that is U.S. population and longevity. Social Security, for example, is forecasted to go from 8% of GDP this year to just over 10% upcoming. And then you look at the U.S. demographics, where we have 17% of the U.S. population 65 or older, and that's going to just over 22% forecasted by 2025, 2026.
You know, I think most people think that the government has more discretion in the way that it spends the tax dollars. But from the way that chart broke it down and from what you're saying, because of the change in population and growth, they really have very little leeway in discretionary spending.
That's very insightful you say that. When you look at the entire U.S. government spend, only about 15% can actually be directed toward discretionary projects, things like bridges and roads and so forth. The rest of it is dedicated to Social Security, social spending, health care, Medicaid, Medicare, military spending, of course. So you only have about 15 cents of every dollar remaining for spending outside those areas and corridors.
Was that always the case, or does it change depending on events or things that are happening in the U.S. economy, in the U.S. government? For instance, now we have a new administration with a fairly aggressive program for infrastructure and things like that.
Right. That's, again, a very good comment. It's not always been that way. Your introductory comments about, for example, the percentage of individual tax, 40% back in the 40s, as you say, predominantly U.S. persons pay far more in income tax, for example, now than larger corporations. So a lot of the research that we've looked at and in talking to our clients, the way to reverse this trend is increasing investment in education. So we can create higher skilled jobs to create tax revenue, actually grow the economy, create more discretionary spending.
Tim, thank you so much. Appreciate it. Tim speaks with Eisner Amper. And the question that we all want answered, what are the chances that you will be audited? Well, Robert Frank did some digging.
Well, the richer you are, the more likely you are to be audited. The million-dollar earners are more than 10 times as likely to be audited as the rest of the country. So where do you fall? Well, if you make the median income, so between $50,000 and $75,000 a year in adjusted gross income, your chances of being audited are about 1 in 244 taxpayers, or about 0.4%. Now, if you make $500,000 to $1 million, you have only a 2% chance. But if you make $1 million or more, you have at least a 5% chance of being audited. Now, if you're a super earner, or those who are lucky enough to make $10 million or more a year, you have about a 1 in 5 chance of being audited. So what are the red flags for the IRS? Well, large deductions relative to your income are a big flag, so don't write off more than you earn. The IRS is really focused on companies that are filed through the individual tax code, so if an LLC or S Corp or C Corp will attract their attention. Now, owning a foreign bank account is also likely to get you flagged. And if you're a business that always loses money, well, you've got bigger problems, but those too can attract the IRS. For Nightly Business Report, I'm Robert Frank.
Well, hopefully you'll never be audited, but to read more about your chances of an audit, head to our website, nbr.com. That will do it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, and we'll see you here tomorrow.